Yeah, good morning, everyone. What we had seen in last 2 days that US market were positive, end up by around 1% in ahead of the Fed meeting, which is likely to be announced today evening. But and the futures are also marginally positive. Asian market is seeing some mixed reaction. Hong Kong and Japan are negative, marginally negative, whereas South Korea, Australia, and New Zealand all are positive. Chinese market is close. We are seeing some aggressive actions in the metal. LME China market since close, we don't have morning numbers, but if we talk about LME number, aluminum yesterday was down by around 4.5%, copper down by around 3.5%, and zinc down by around 3.5%. So that is all mainly on account of lower industrial growth, which has been seen in China and US, and Fed tightening and COVID cases in China. So all these are likely to have impact on the metal stock in today's trade. Apart from that, oil was more of a stable. So overall, market looks mixed or stable type of market likely today, but metal should see some corrections. I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. This is Swati. Today, looking towards the Asian markets, we believe that our Nifty is likely to open on a flattish note. On the technical background, on Monday itself, Nifty somehow managed to maintain a positive closing above 17,000 psychological level, which gives us some sort of a relief sign. Going ahead, we believe if the Nifty sustains above 17,000 levels, the upside rally can be extended towards 17,200 to 17,400 levels on the downside. Whereas 70,000 will act as a crucial support level. If it's break that level, then again we might witness some profit booking into the Nifty, which might take a Nifty towards 16,800 levels on the low end. But for the today intraday purpose, the first resistance is placed at 17,140 levels. Any more above that level, we expect a rally up to 17,220 to 270 levels on the higher side. Whereas on the lower side, 17,000 and 16,920 are the two supports for the intraday purpose. Coming towards the bank Nifty, on the Monday itself, because of the bank Nifty, we have witnessed a pullback rally into the Nifty index also. Bank Nifty has maintained a positive closing above 36,000 psychological level. Upside, I believe that this pullback rally is likely to be extended towards 36,400 and 36,600 levels for the today intraday day purpose. Whereas on a downside, 35,850, 35,500 will be the crucial support level for the today intraday. Coming towards the Nifty Finance, 16,600 and 16,680 are the important resistance zone. Whereas on a downside, 16,400 and 16,330 will be the two supports levels for the Nifty Finance. The overall view will remain a cautious only as long as Nifty sustains below 17,400 levels. Those who are having any long positions, they can hold on, but with the strict stop losses. Coming towards the stock specific, on Monday we have initiated a UPL buy call. This particular counter is really doing very well on the technical front. Even though the market was correcting, this particular stock is well placed above all the important moving averages and just trading in the pattern of higher tops and higher bottom, which indicates a potential upsides. So I believe one can take a long position into the UPL at the CMP as well for a target of 865 to 870 levels on the higher side, and one can keep a stop loss of 815 on the lower end. I request all the clients to maintain all the long positions with the strict stop losses. That's it from my end. I requested with you guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, we had mentioned on Monday that there is some good support at 17,000 levels, and some bounce back can be seen, which was seen. Also, 17,000 continues to hold the highest open interest amongst puts. So that is going to be a good support area on the downside. We might see some good amount of buying coming in for Nifty. Also, writers are building aggressive positions now from 17,000, 16,900, 16,800, 16,500 put strike. So there is good support on the downside, and there's not much call built up on the upside. So there is a possibility of good bounce back up to 17,300 odd levels. So look out for the same. Broadly, Nifty is in a range of 16,900 to 17,300, and this range should stay for some time. The other indicators are still indicating bullish bias. So overall, we are staying bullish for a bounce up to 17,300. From the stock specific front, HPCL, BPCL witnessed good amount of short covering action, and they are likely to witness good buying even for today. Laurus Lab also witnessed good buying. Some short covering was seen, so that is one stock that can do pretty well. Tata Chemicals has seen aggressive long positions, and it can witness good buying going forward. So look out for the same. We continue to like these stocks. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Today, LIC's IPO will be opening, that is 4th May, and it will close on 9th May. The issue price is 949 rupees, and issue size is 20,557 crores, whereby Government of India will be selling 3.5% stake. 10% of the issue is reserved for policyholders who will be given a discount of 60 rupees per share. Retail investors and employees of LIC are being given a discount of rupees 45 per share. LIC is the leader in the fast growing life insurance industry with a market share of 64%. Although the company is consistently losing market share to private players, it can yet grow modestly at around 10 to 12% due to strong industry tailwinds, where industry itself will grow at around 15 to 17%. And also a shift in focus towards the higher margin non-participating products will aid expansion in VNB margins. LIC should trade at a discount to listed private entities, whereby listed companies trade at anywhere between 2.5 to 4 times price to embedded value. Owing to LIC's traditionally savings heavy business mix, heavier dependence on agency channel, lower VNB margins, lower ROE, and also the status as a public sector unit. Although the price at which LIC is being offered at 1.1 times price to embedded value, we feel the price is cheap, and there can be some modest listing gains possible. So that is why we have a subscribe rating on LIC's IPO. On the results front, HDFC result was above expectation. Growth in individual loan book has accelerated to 17%, and overall loan growth is at 15%. Gross NPA declined handsomely at 1.9% versus 2.3% in December quarter. So we have seen a good decline here. Restructured book has also come off sharply from 1.3% to just 0.8%. So all round, we think a result is good for HDFC Limited. Mahindra and Mahindra Financial Services result was in line. Although operating performance was poor with loan book remaining flat and operating expenses increasing by 30%, we saw that pre-provisioning profits declining. However, on asset quality front, performance is decent. The net NPAs have now reduced from 5.6% to 3.4%. Company had guided earlier that it would come below 4% level by the year end, and which it has delivered. But also we have to keep in mind that company has written off loans worth 1,200 crores, which is more than the normal run rate. Typically in Q4 they write off around 500, 600 crore kind of loan, but this time it was 1,200 crores. Plus there was seasonally, seasonality benefit also for the company. If we look in totality, the gross stressed loans, that is stage 2 plus stage 3, they have come down from 29% in December to 22% in March. So there is a good reduction, but still at an overall level, it remains at an elevated level. So this trend needs to continue now going forward. It should not happen that in June quarter again this increases. So if this continues to decline in next in June quarter as well, then market will take it positively and re-rating process will begin. Home First Finance result has improved. Loan growth is strong at 30% year on year, which is one of the highest we have seen in the NBFCs. And loan book has now reached 5,400 crores. Even quarter on quarter, the growth was 8%. We expect going forward, the company can maintain 30-35% kind of loan growth due to low base and a large addressable market. Gross NPA came at 2.3% against December quarter 2.6%. If we look at the 30 days past due metric, that has also declined from 4.7 to 3.7%. Pre-COVID, this used to be at 2%, so there is still a few quarters away. Bounce rates also declined to 14.5% from 15.5% in December, and pre-COVID this used to be at around 10% levels. So we can say that pre-COVID kind of asset quality is around 3-4 quarters away for Home First Finance. Although looking at the acceleration in growth, we think there is a decent scope for re-rating here. That's it from my side. Thank you.
Good morning, everyone. Titan came out with their results, and results were below expectations, though volume came higher at 6% versus expectation of 1.7%. But during the con call, the management has clarified that there were many one-offs during the quarter, like they have given the ex gratia amount to his employees of around 72 crores, and also taken the upfront provision for the VRS scheme which they have launched, and the cost was for that for 51 crore. So if you adjust all this thing, then the EBITDA is not so below, and the margins comes around 12.6% versus reported 10.7. Expectations were 13.9. So we believe this is slightly below expectations, though the stock trades at rich valuations of around 70 times FY23. We can see some minor decline in stock price in today's trade. Britannia came out with the results, and results were marginally above expectations. Volume came at 4% versus expectation of around 2%. Overall, even the margins were also higher. The con call is scheduled today, so we'll get to know more details about the raw material and how the company is taking the price hike in future. Adani Wilmar came out with the results, and results have declined. Though the sales were higher and grew by 40% YOY, the margins were major disappointment, which came at 2.8% versus last year 3.3. Also, we have seen quite a good rally in Adani Wilmar. That is why we believe that the stock can react negatively. In another move, the company has acquired Kohinoor brand from the Mech Comics Switzerland. This is not the same company which is listed as Kohinoor. This is a different company. The company didn't disclose the amount of acquisition. This would give the benefit that the company would be able to use the brand Kohinoor for rice and other ready-to-cook curries. Eris Lifesciences announced their results, and results were marginally below expectations. The sales grew by 10%. However, margins were a little lower at 31% versus expectation of 34%. In another move, Eris also acquiring Oakneck Healthcare Private Limited for rupees 650 crores. That works out to around 3.5 times FY21 sales. It would give a benefit to Eris in the dermatologist segment. So this is positive for Eris. Aztec Life Science announced their results, and results have improved. Sales grew by 58%. In fact, the margins were also improved around 200 bips on YY basis. Symphony announced their results, and we have seen the heat wave going around in the country. So this the season has actually started early for the company, and even the next season is the peak season for the company, and the results were ahead of expectations because of that. Sales grew by 13%, and margins have improved to 21%. Alembic Pharma announced the results, though the results looked below expectations. However, there are also various one-off in this year during this quarter. They have taken 188 crores on Elinor Pharma acquisition. So if you adjust that, then the result was quite okay. Dwarikesh Sugar announced the results, and results have improved during the quarter. Thank you.
Good morning, everyone. Celia Solutions has come out with improved set of numbers for the quarter, both on the revenue and the margin front. Revenue grew by 6.3% Q on Q and 25% year on year. Even EBITDA margins has improved and came in at 37% versus QOQ of 35.4%. Stock is trading at 21.3 times TTM EPS. Thank you.
Yeah, good morning. Tata Steel result was below expectation. Consolidated sales volume stood at 8 million ton versus 7 million ton quarter on quarter. EBITDA per ton came at 18,764 versus 22,673 quarter on quarter. On its standalone business, volume stood at 4.73 million ton versus 4.64 million ton quarter on quarter. EBITDA per ton came in at 23,690 versus expectation of 25,107. Tata Steel Europe volume stood at 2.4 million ton versus 2.2 million ton quarter on quarter. EBITDA per ton came at $241 versus expectation of $203. Company has reduced its net debt to 51,049 crores from 62,869 crores in quarter 3. Company has also recommended dividend of rupees 51 per share for FY22, and the board has also considered a subdivision of 1 equity share into 10 equity shares. Share is trading at EV by EBITDA of 4.9 times FY23 EBITDA. Jindal Stainless result was okay. Sales volume came at 269,000 ton versus 248,000 ton quarter on quarter. EBITDA per ton came at 31,266 versus 32,181. Prakash Industries result has improved. Revenue came at 1157 crores versus 847 crores quarter on quarter. EBITDA came at 108 crores versus 87 crores quarter on quarter. The share is trading at EV by EBITDA of 4.6 times on trailing basis. Thank you.
Good morning. So Ramkrishna Forgings announced its result. The result had improved. The revenue came at 719 crores, which grew by 19.5% on a sequential basis and 38% on a YOY basis. EBITDA margin came at 20.4%, which was the same on a YOY basis. The management indicated improvement in performance, mainly due to addition of newer products and higher demand for products, which led to improvement in better utilization of recently added capacity. The company also expects growth in the range of 20 to 25% in top line for the entire year of FY23. The stock is trading at a PE of 15.3 times TTM EPS. Hero MotoCorp announced its result. The result was below expectation. The company had sales of 9 lakh units as against 12.92 lakh units on a sequential basis and 15.68 lakh units on a YOY basis. Revenue grew by 6% on a sequential basis and 15% on a YOY basis to 7,422 crores versus an expectation of 7,500 crores. EBITDA margin also was lower at 11.2% versus expectation of 12%, which was lower on a sequential basis from 12% and 13.9% on a YOY basis. The margins were affected mainly due to lower rural demand, price hikes, and higher commodity prices. The company's board has recommended a final dividend of 35 per share. The stock is trading at PE of 15.2 times FY23 EPS. Thank you.
Yeah, I will also discuss the auto monthly sales for the month of April. Just quickly, most companies posted sales which were below expectation because of supply side issues affecting production, and also multiple price hikes that companies have taken to pass on the raw material cost increase. And also last year in April, we had the second wave of COVID in India. So the base is low and not comparable on year-on-year basis. So we should look at a month-on-month basis, which and also overall, the numbers which were posted were below expectations. Month on month, the passenger vehicle side, Tata Motors again outperformed. The decline was just 2%. Maruti, in case of Maruti, it declined by 6%, and M&M, the auto part, declined by 22%. For two-wheelers, again, decline of around 5 to 7% for in case of Hero, TVS, and Royal Enfield. For Bajaj, it was positive 5%. For tractors, Escort sales were down 17% month on month. On other hand, M&M sales were up 86%. So that's a positive sign for Mahindra. And after many months of decline in tractor sales, even on year basis, we can expect some revival here with rural expected to do well now. And commercial vehicles seasonality is strongest in the month of March. So month on month, every year there is a steep decline, and the decline is in line with past years patterns. So Tata Motor sales declined 34%, Ashok Leyland 41%. And but on the ground, if we see, then demand for CVs is very strong from infrastructure and construction sectors, and improving freight utilization should also support CV volume going forward. That's it from my side. Thank you.
Yeah, apart from this, Godrej Property announced results, and results were ahead of expectations. New booking came very strong at 3,200 crore versus last year 2,600 crore, around 26%, 23% higher year on year. Apart from that, the launch pipeline, what the company has indicated, is also very strong at around 16 million square feet versus last year, 20 million square feet versus the actual launch in last year of around 10 million square feet. So going forward also, the continuation of higher booking can continue. Apart from that, the key concern right now is the increasing cost of production for the builders, which is keeping the real estate sectors under pressure. Apart from that, yesterday, Make Money Organic has in their con call has given comparatively positive outlook. Though last quarter result was benefited by very high prices of 2D, 2,4-D product, which is one of their herbicide and contribute around 20% of their agrochemical sales. That prices has corrected in current time in April month. So this extraordinary profit performance may not continue going forward, but from here they are coming up with a few expansion which are likely to start in Q2 and Q3, which are likely to continue to spur up the volume and also the performance. So though prices has moved up post this result, but and may see some consolidation here, but the overall outlook on the Make Money Organic is positive. Then JSW Energy came up with a number. Apparently, number looks very good, but there is one-off provision right back which has happened, and because of that, the result looks good. That is related to one of their hydro project of Pancham Wangtu. So if we adjust to that, then the result is more of in line with what was expected. And then KEC International reported a poor set of numbers. The margin came off sharply in this quarter to 5.9% versus expectation of 7.4%. Their usual margin before this all these cost inflation were at around 10%. So the margin level has come off a lot for the KEC International. Then JBM Auto has reported good numbers in this quarter. with sales increase of almost 44% year on year, and EBITDA margin also showing flattish trend of around 11.5% versus year on year 11.3%. Now result for 6th May. So Grindwell Norton is expected to report a declining set of numbers, wherein revenue is likely to grow by around 8% year on year, but margin is expected to come off. Last year, same quarter, they reported margin of around 22%, which is expected to come off to 17%. Last quarter also, the margin were at 18%. The long-term average margin of these companies are around 20%, so it will be impacted because of the high material cost. Then Tata Power is likely to report improved set of number with revenue growth of around 14% and EBITDA growth of around 15% year on year. Bajaj Consumer is likely to report number, and the numbers are likely to come off in this quarter with revenue decline of around 7% year on year and quarter on quarter revenue remaining same. EBITDA margin is also likely to come under pressure and is likely to come at around 21% against last year 25%, though it will show some improvement quarter on quarter from the last year level because of the price increase which the company has taken. Then Reliance Industry is likely to report number, and numbers are likely to be good. Here, a key thing is of first is Reliance Jio. In Reliance Jio, subscriber are likely to increase by around 3 million, and ARPU is likely to show substantial improvement from around 151.60 to 165 rupees. And EBITDA margin is also likely to improve from 48.6 to 50.7% in this quarter. So Jio result will be good. Then Reliance Retail is also EBITDA is likely to increase year on year by around 24% and quarter on quarter by around 27%. Then even the key performer will be O2C business, where the EBITDA per ton is likely to increase from 7,700 to around almost around 11,000 rupees. So the substantial increase in margin is expected in O2C business. So overall, all the three businesses are likely to report good number. We had already seen Reliance running up because of the expectation of these good numbers. Then some financials numbers are which are likely to come are the CSB Bank. Here the numbers are likely to show improvement, wherein NII is expected to grow by around 19%, and PAT is likely to show substantial improvement of around 200%, mainly because of the last year higher provisioning, and because of that the profit was quite low. Then Federal Bank is likely to report okay set of number, wherein NII is likely to grow by around 11%, PBT is likely to grow by around 13%, and PAT is likely to grow by around 13%. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.